Hello everyone, my name is Michael Lamai. I am the founder of ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. Today I was doing a live Q&A on StockTwits. StockTwits is a platform kind of like Twitter, but for stocks. And it's really great, and they invited me to do this live Q&A with their members, and they were asking me all sorts of things, everything that you could think of about trading. And so a lot of great questions came out of that, and I wanted to expand on a few of them and share them with you. So let's get going. Now, this was one of my favorite questions that popped up. The question is, when you trade, how much is instinctual and how much are your fundamentals? So basically, it comes down to how much do you trust your gut? Now, well, when we're first starting off trading, well, we don't really have a gut. We don't really have an experience at all. So it's important for us to trade off of whatever our criteria is going to be, whether it's fundamentals, technicals, whatever kind of rules or whatever kind of system it is that we're trying to follow. We want to try to stick within those parameters because we don't have experience. Well, we haven't developed a gut. Any kind of a feeling that we're going to get is going to be an emotional feeling, and those emotions never really go away. They're always there. The difference is that when we begin to gain experience, it's going to be more of our experience, that inner voice telling us whether we should take a trade or not take a trade, or that if there's something that just feels right or just feels wrong. That's experience talking. That's your gut talking. And as you become a more and more experienced trader, you're going to want to listen to your gut more and more. Not only because you have the experience, but because you also want to develop your gut as well. You want to develop that inner voice that's going to be able to tell you on the fly, should you take this trade? Should you not take this trade? Should you enter? Should you exit? At this point, I've been trading for a little over 7 years seriously, and I'd say I probably go with my gut maybe about half the time, maybe a little bit more than half the time. The head is always going to be the check on the gut, but the gut or the heart is going to lead, and the head is going to help us figure out how to get there and make sure that we don't get too far off track. So a little bit of both, but really, really like that question. So on to the next question. Here's another question that I tend to hear a lot. Do you typically wait for a close to decide whether a resistance or support level is broken? Or could it be during the session? Well, for me, the way that I enter exit, and there's no one right or wrong way to trade. Let me just put that out there right now. It's going to be whatever's right for you and whatever you're able to make work. For me, I like to set up my trades while the market is sleeping. So I'll analyze the markets now. Right now it's almost 10 p.m. And I'll do my market analysis and I'll place orders, and then I'll step away. So that way, when the market is open, I don't have to do anything. It's just the orders are there, the plan is already made, and it just needs to execute, and it doesn't need me to be actively watching the market in order for the plan to execute. So in that case, I'm going to enter intraday at a certain price. Just whenever price meets my stop, I will enter at that price. Same thing for when I'm going to exit. If price falls and it falls below a certain price, then I'm going to get out. And that's all planned in advance, and that's how I'm exiting. In a previous video, I mentioned that it's kind of a double-edged sword when you're setting up these stops, because yeah, you can end up exiting at a certain price, and then price can rally in your face, and you can end up with a fresh buy signal when you just got stopped out and you sold. And that's just part of the game, right? Like that's the risk that you take. For me, it works because the benefit is I don't need to sit in front of a computer all day, or I don't need to be available all day in order to trade. And the obvious downside is having the stock rally in your face. Well, the way that I deal with that part of it too is that I can always get back into the trade. And I'll typically be able to check the market and my stocks at around 3:30, 3:45, and then if I see a signal, an end of day signal, then I'll take action on that. But if a stock is falling below a certain price, let's say at 9:30, 10:30, 11:30, well, whatever time in the morning or before the end of the day, it could just keep on falling. And I would much rather be out and not have to worry about any of that uh, versus getting a few extra points or not having to worry if the stock just rallies on me. So that's what I'm giving up. That's what I'm getting, is not having to be in front of the computer all day, and it's worked for me. Here's another excellent question, and it's pretty tough for me. The question is, hi Mike, what's the single most important parameter you use in screening if you had to pick just one? Now, it's really hard to just pick one thing, because it's not really one indicator that's going to rule them all. This isn't Lord of the Rings. It's more of a blend of everything that comes together that's going to make your decision one way or another on whatever it is that you're looking at. But gun to my head, I go with relative strength as the most important of all the different things that I look at. And I look at price and volume, resistance, moving averages, a whole bunch of fundamental and other technical criteria. You could check what I scan for. There's a blog post on ChartYourTrade called How to Scan for the Best Growth Stocks, and that outlines everything that I scan for. And there's like 65 different things that I scan for. But anyway, of everything, I would probably put relative strength as the most important thing. And the reason why is because we always want to be looking at things that are outperforming the market. And if we're looking at relative strength, not to be confused with relative strength index, which is comparing the stock's performance to itself. We're looking at relative strength, which is comparing the stock's price action to the S&P 500. And we want stocks that are going to be outperforming the S&P 500, especially if we're buying stocks, assuming that we're taking these long positions in the stocks. We want our stocks to be outperforming, so we want that relative strength line to be going up or be going up this way, depending on which. I always get confused with how it's going to show up in the video, so I think that it's this way. Anyhow, you want your stock to be outperforming the S&P 500, and that's why I like relative strength as one of my top indicators that I look at. This is another really good question. I like it a lot. How do you determine your trades with respect to sector rotation? When do you switch to defensive sector stocks? Now, the way that I like to look for stocks, or one of the key things that I like to look at, is which industry groups are expanding and contracting within the scans that I run every single week. So we've done a whole bunch of videos on what stocks to buy, and I talk about the different scans that I run. Also, to reference that blog post again, how to scan for the best growth stocks, it shows I run 8 different scans, and there's comprised of all these different fundamental and technical criteria, but I run those same scans every single week. And so one week the list will be expanding, and then the next week it'll be contracting, and there'll be different stocks and different stocks from different industry groups coming onto and falling off of those scans. And what I've noticed is that when certain industry groups begin expanding, then it often correlates to something going on in that industry. So I'll take a look at the ETF of the industry, and I will also take a look at all the stocks within that industry group and look at them as a whole and see what are they doing. Are they all making a big run, or are they consolidating, or are they all kind of falling off a cliff? Sometimes what will happen is that many of the stocks within that same industry group will be setting up, and they'll be setting up in similar patterns. Part of what that tells me is that the entire group may be getting ready for a move, and so if the number of stocks within the group is expanding and they're all setting up, then that's something that I'm going to pay attention to and pay extra attention to, and try to pick now one or two of the better setups within that group and try to play that group move. It's something that's worked many times, and it's something that I would recommend checking out because it's just something that works. And those were some of my favorite questions that came out of the live Q&A from StockTwits this afternoon. I hope you enjoyed that. I hope you got something out of it. Let me know what your favorite question is. If your question wasn't answered, go ahead and leave that in the comment section below as well, and I will personally answer you, and it might even appear in a future video. Thank you so much for watching. If you liked the video, take a moment, click that little like button, and also subscribe to the channel so that way you're making sure that you get all of our future updates. Thank you so much for watching. Truly appreciate your attention, and I will see you again in the next video. Take care.